Have you ever wondered how to identify the 4 market phases? Are you even aware of the 4 market phases? Accumulation, markup, distribution, and markdown. Well, we're going to take you on a journey and explore the characteristics of each market phase. We're going to dig deep into how the markets operate and why they move, how the well-funded, the smart money, institutions manipulate retail by exploiting their emotions. And if you enjoy the video, don't forget to give us a like, subscribe, hit our notification bell to stay updated on our latest videos. Please take a read here through the disclaimer and the copyright. And for today, our agenda, we will begin with a brief introduction and then we'll go into the Wyckoff price cycle. We'll discuss some phases and then go on to a case study. We then have an interesting overlay via an emotional template and then on to the role of the Composite Operator. And from here, we go a little deeper into the market. We speak of accumulation and the phases within phase A, B, C, D, and E. This ends with a couple of case studies. Then on to distribution. Again, phase A, B, C, D, and E. That will end again with a couple of case studies. Here, we want to try and apply our newfound knowledge. And then on to some final words. So let's begin. The foundations behind our methodology are deeply rooted within Wyckoff and its various branches over the years. And first and foremost, I believe that we should spend a little time on Wyckoff. Let's explore the bare foundations of Wyckoff, the process of accumulation and distribution. Think of this as a beginner's guide before we dig deeper into the journey and methodology that we use at Acme Trades. And within this introduction to Wyckoff Part 1, we will explore accumulation, distribution. We'll take a look at some classic Wyckoff schematics that will offer further nuances or insights into these structures. We'll gain a good understanding and then switch to some case studies, label them with our newfound knowledge, offer some practical advice about how to trade these structures. We'll be using core Wyckoffian terms such as springs, upthrusts, backing up action, etc. And we'll go a little further and deeper into market behaviour, slightly peel back the layer of the markets and offer some additional nuances that will provide criteria for potential opportunities. Then back again to recent charts so we can start applying the knowledge in real life examples. And I must say, I'm very excited to be able to share this with you. And lastly, thank you. Thank you for being interested in Acme Trades and taking the time to review our material. I sincerely hope you gain value from this course and it provides you with at least a little understanding of how Wyckoff frames the market, how the market moves and why the market moves. But before we go into the accumulation distribution structures, we need to speak briefly of the Wyckoff price cycle. And here is the Wyckoff price cycle, kindly constructed by our in-house tech guru, Ben. But this cycle itself can be broken down into 4 phases. That of accumulation, markup, distribution, and markdown. And what's fascinating is that as a trader, and those not familiar with my background, I am an intraday specialist, these phases, we can call them patterns, which we'll discuss shortly. And they occur on my trigger time frame, which is a 3-minute time frame. Yet these phases occur on all time frames, 5 minutes, 60 minutes, daily, through to weekly charts. and this is known as fractality. Now, there is a term within trading that suggests the markets are fractal in nature. Simply, this means what occurs on one time frame will occur on all other time frames. Think of it as a recurring pattern that occurs across all time frames. Now, I feel compelled to tell you that yes, the markets are fractal to a certain extent, to an extremely high degree, well, in the late 90 percentile. However, I have observed certain market behavior patterns and have constructed strategies that only occur on small time frames. They have yet to come to pass on higher time frames. This may appear to be contrarian, certainly against the norm, and certainly has caused a stir within the trading community. But I trade the markets by its own actions. I'm not here to ask why. I simply observe and accept the market as it is. At Acme Trades, we are bar specialists. We understand deep market behavior and contextualize. Pioneers in a way. We continue to find new patterns, bar formations, thus trading opportunities. So let's talk about the phases. Each of these phases here has its own characteristics and environment. You can get trading specialists that prefer a certain environment over another. And this is partly due to the psychological makeup of the person, an individual, as we all have our own natural strengths, talents, and experience. All play its part. Anyhow, let's keep things simple. These phases here within Wyckoff are controlled by an entity known as the CO, the Composite Operator, also known as the smart money. The well-informed, the strong hands, traders with great influence, and within the accumulation phase, the CO are accumulating stock. They are actively buying. There will be a price area which is deemed to be of value, and they will buy consistently until they have their full. The process of accumulation can take some time due to the amount of stock that needs to be acquired. If the CO wants to buy 500 million shares of a stock, you cannot purchase this all at once, as the demand, buy orders, will increase the price of X stock. They have to slowly accumulate over time with a specific price area band in mind. And every time price will dip into this area, they will buy. And once we're able to recognize the process of accumulation, we too can position ourselves with the CO. There is much more to consider, such as timing, where we are within the accumulation phase, but we can save that for a more advanced video. Now, once the CO, the smart money, has accumulated enough stock, we enter the second phase, which of course is markup. And this is where price advances. It moves higher. Think of it like this. Accumulation, for the most part, could be considered a trading range. Price bounces between two areas, that of support and that of resistance. And then this is a little buying zone where the CO, the smart money, are purchasing stock. And once the quota has been reached, price breaks out into markup, which of course is the second phase, which is essentially the trend. Briefly spoke earlier of different traders preferring to be a specialist within a certain environment. And from my limited knowledge already, one can observe the difference between the environments of accumulation, as price for the most part moves sideways, and it conforms to the boundaries of support and resistance, whereas markup here, phase 2, it trends as it moves higher. And now to the third phase, distribution. This is where the CO, the smart money, unload. profits become realized, and the composite operator, they sell, being the strong hands to the weak hands. And the weak hands are often referred to as retail traders, as in the average Joe, the uninformed. Now, not only does the CO, the smart money, profit from selling at the top of the market, they can also start a campaign to distribute. They build a position by acquiring shares with the premise of lower prices. This is known as shorting the market. Exactly the same tactics are used within distribution as in accumulation. There will be a fair value zone within the trading range or distribution trading range where they will acquire, say, another 500 million shares of stock by opening short positions, looking to capitalize on lower prices in the future. And once the CO, the smart money, has its fill, it's ready to break down into phase 4, Markdown. And Markdown is the trend to the downside. And this, in its simplest form, is the Wyckoff price cycle, that of accumulation, markup, distribution into markdown. And this is one full cycle. Then the pattern repeats itself over and over again. And what's fantastic about this process is that it occurs on all time frames of markets: futures, commodities such as oil, gold, stocks, indices, forex, crypto, ETFs. It is a universal pattern. Now let's go to a case study. And here's a case study, an example of the price cycle from real charts. General Electric, a stock, on a daily time frame. It's all well and good having a theory, but seeing it play out like this on a real life example certainly adds a degree of validity. Irrefutable proof in regards to the Wyckoffian price cycle. So we have Markdown. We have accumulation, phase 1, markup, phase 2, distribution, phase 3, then markdown, phase 4, and then with process starts again into accumulation, etc., markup, distribution. And the cycle, as mentioned, occurs on all time frames. So the question I'm sure you're thinking is, does the CO, the smart money, build a position on a 1 minute time frame? No. This is why I refer to the phases as a pattern. Now there is an overlay that can be used as an emotional template that gives credence to these phases. Try to think of the market as an entity, living and breathing, that is made up by many, many market participants. The CO, the smart money, understand the emotional template and can take advantage of retail, the average Joe, by understanding herd or group behavior. Now this is a beginner's course. We won't dig too deep into the template. However, I think it's incredibly important that you are at least privy to this information, because fundamentally, this is the underlying function of the markets at its purest level, driven by emotion, group herd mentality. The CO, the smart money, strong hands can manipulate the weak hands, retail traders, into poor decision making. So this emotional overlay is placed above the market cycle and is in reference to the emotions of retail traders, the uninformed, less experienced, the average Joe, not the CO, not the smart money. This is the average Joe feeling optimism, excitement, etc. Okay? Now, think about this at a deep level. Every transaction within the marketplace needs a buyer and a seller to fulfill or to complete a transaction. And if you put a buy order into the market, yet no one is selling, who will you buy from? You will not get filled. And our CEO, the smart money, who wants to campaign a stock and create a huge inventory of, say, 500 million shares, needs liquidity, also known as market participants. They need someone to fulfill the other side of the transaction, whether they are buying or selling. Now, if we refer to the emotional template, the average Joe, say the taxi driver, the warehouse operative, is looking to get involved in the market and buy a piece of the action, there is a lot of thrill and euphoria within the marketplace. Everyone is talking about X stock and there's a buzz around the stock. Nothing but good things about X stock are on the news. Bloomberg, newspapers, your favorite YouTuber, you name it. So these red dots here represent distribution via the CO, the smart money. Whilst everyone is buying retail here during the excitement, the thrill, the euphoria stage of this template, the CO is offloading positions. Okay, they bought down here. Now they're offloading positions up here for a profit. And or they're opening a short campaign. So all these orders are flying in and they can absorb all this euphoric buying due to the mass hysteria, and they can start to build a short position. But most importantly, they can do so without moving price. Don't forget, they have huge orders and inventory that needs fulfilling, and this buying frenzy in this stage provides them the ability to build their inventory without affecting price, as every transaction needs a buyer and a seller. So after retail have literally bought up here at the highs, FOMO trading, fear of missing out, price starts to move against them. A little anxiety kicks in. Denial kicks in. Then, it's okay, it will return, it's just a little correction, but then price continues south. Emotions become more heightened, more intense. We have fear, desperation, and panic starts to kick in. They don't understand, this shouldn't have occurred, and now they have a significant loss. These green dots here, they represent markdown for the CO who started a position and sold into the euphoria, the panic buying from the retail, from the average Joe. Then boom, capitulation. This is where the average Joe can no longer hold on to pain and liquidate their positions, fueling the start of another campaign, that in the form of accumulation. And the red dots here, capitulation and despondency, is where the CO start to build his inventory, and so the cycle continues. And this is it, the truth behind the markets. As I stated earlier, this is the underlying function of the markets at its purest level, driven by emotion, group herd mentality. The CO, the smart money, the strong hands can manipulate the weak hands, the retail traders, into poor decision making. And when I use the term manipulate, the CO, the smart money, will use news. It will use media, press, social media to their advantage. And for clarity reasons, the term composite operator, the CO, is a broad term. It gives a tangible context, a foundation for us to understand what may or may not be occurring within these phases. And Wyckoff coined the term the composite man to help us understand the price movements in individual stock as the market as a whole. And here is a quote from his works. All the fluctuations in the market and in all the various stocks should be studied if they were the result of one man's operation. Let's call him the composite man, who in theory sits behind the scenes and manipulates the stocks to your disadvantage. If you do not understand the game as he plays it, and to your great profit if you understand it. We have now established the 4 phases within the market cycle: accumulation, markup, distribution, and markdown. Now we are going to take a deeper look into each of these phases, starting with accumulation. To help cement the newfound knowledge, we have constructed a free interactive workbook full of the charts found within the course. Go to our website www.acmetrades.com and explore this resource. That's all, folks. Thank you for listening to this video. I hope you found it informative and extracted value. Don't forget to give us a like, subscribe, hit our notification bell to stay updated on our latest videos. We value your feedback and suggestions, so please leave a comment below and let us know a topic you would like us to cover in future videos.